Okay, welcome back into my InvestEngine portfolio update now for the month of November. So just one more left until we close out 2024. And what a wild ride 2024 has been, especially for us investors. Now, just quickly going into some of the details, not going to spend too much time on that, but the S&P 500 this year is up almost 27%, at least at the time of recording this video, which is not something any of us expected, at least most of us expected when we started this year. As you may have seen, November's actually been a very good month for markets, and the S&P 500, if we take that as our benchmark, is up over 3%, which doesn't sound like a lot, but when you consider the amount of money that's invested into these markets, you realize that this is just a huge and enormous amount of money, especially when you compare that to an annual average of something closer to 9 or even 10%. Now, when you're investing, you know that not everything has to go up, but Bitcoin is certainly seeing a big rise, almost getting very close to that $100,000 per coin mark as the Trump administration gets themselves ready to be inaugurated as we head into 2025. It nearly hit 100K, then just pulled back again. Seems to be a lot of resistance up there. Let me know in the comments, definitely, if you own any Bitcoin. I personally do own some Bitcoin, just for full transparency, but I certainly don't let it get to a huge part of my portfolio. And you can't put Bitcoin in an ISA, at least just yet. Anyway, with a good month for most of the markets, let's just dive into the portfolio straight away now, and we'll spend a bit more time actually talking through the portfolio and a couple of questions that I wanted to address in a bit more detail. So I'm just going to log into my account now. So just for reference for everyone, especially if you're a newer investor, I've got 2 accounts here on InvestEngine. The biggest part though, by far, is the Stocks and Shares ISA. And I've got a few different cards, which I'm going to talk through in a moment. Now, as you can see, the portfolio value is sat at £48,155.66. The pennies always count. And I think this will be a new all-time high for the account. But don't forget, not just because of the gains in the account, but also because I do invest most of my money each month into this Stocks and Shares ISA. So I would expect it to go up, at least in value, that you see on screen. And then also it's worth pointing out that I do have a very small self-invested personal pension here. If I just scroll down, you'll see down here in the personal pension section, I do have £2,673 here that I put in £200 a month as well. So in total into my InvestEngine account, I do put in £1,000 in total across all of my investments. And as I say on quite a lot of these updates for most people, my investing is my largest expense, my largest outgoing out of everything. Now, let's have a look at the portfolio itself. Then I'm going to discuss a couple of interesting points that could have been brought up now and then over the past couple of months. So going into the portfolio now, what's really interesting, and I've said this before, but every time money goes into the account, you'll see these little black dots appear. And then the green line you can see of the actual account itself going up in value as the market has done well. So let me just take that down to like 6 months, for example, just so we can kind of see what's going on. As you can see, I don't bother trying to time the market. Money goes in automatically every single month. I just put my money in at the first of every month, nice and simple, and it just goes into the market and buys the ETFs, the investments that I've got set up in this portfolio. Sometimes I get lucky, sometimes I get unlucky. For example, you can see lots of these little black dots might look like they're at the top of the market, and other times they're nearer, close to the bottom or somewhere in the middle. But over that long term, I really just want to achieve that long-term average. Anyway, let's have a little quick look and see how the rest of the investments have been getting on in the account and where this money, I should say, is actually invested. So I'll scroll down here, as many of you will be familiar. This is how I've broken up the world. This is how I invest my money. This is definitely more complicated than you need to make it, but I'm going to touch on that in just a second. So as you can see, there's 5 different ETFs here, which basically make up the world. And going from the largest to the smallest, we have the Vanguard S&P 500, which I use as my kind of American benchmark. And the second one here, you can see sitting here at 14% is developed Europe, excluding UK. So we don't double up on the UK because we've got that later on. Have emerging markets next, around that kind of 10% mark. We have Japan here sitting at 5.4%. And then finally representing the UK is the FTSE 100 here, which is sat around 4%. Now, as you can see, pretty much everything is up apart from Japan at the moment. Now, from memory, Japan was a relatively new injection into this portfolio, so it hasn't had the same amount of time. But everything else has had a much longer time now to grow. So as you can see, there's no surprises really, but the US market has carried everything. And no doubt many of your portfolios as well, if you're a global investor, those US stocks have really just continued to steamroll ahead and pull everyone's portfolios forward. Other parts of the world have done okay, but you'd be hard pushed to argue that they've been doing very well. You see in second place for me is the FTSE 100, And then just after that is emerging markets. But Europe has certainly been lagging behind. Now, a key question will always be, well, what happens in the future? And I have no idea, which will then lead me on to another point which I wanted to talk about, which has been brought up now and then. So this portfolio, which I call Toby's World, is 5 different ETFs, and I do share a link to that in the description along with some of the other ones. Now, the reason I've created this is one, because I'm a little bit of a tinkerer and I like to mess around with my investments, whether that's a good thing or a bad thing, who knows. But if you have a look here, you can see that this portfolio cost me 0.09% as a total expense ratio. Now, for those of you who don't know, that total expense ratio is how much per year these investments are costing me that are built in to those ETFs. So 0.09% is very, very low indeed, cheaper than a lot of other ETFs which might cover the world. So this allows me effectively to control one of the biggest factors when investing, and that's my costs. This is definitely very important to me. However, will I perform better than any other different portfolio? I don't know. And let me just touch on that in a second. If I go back to my portfolio here, you can see the different portfolio cards that I have. I don't actually invest in these, but I have them as portfolios to share and also to demonstrate what kind of things you can do. So for example, if I go to the 2 Fund Global and something I've covered in previous videos, you can see you can break the world up into 2 parts. For example, you could just have developed world and the emerging markets. And the split roughly is something like 90% and 10%, although you would probably want to go and double check that to make sure you're comfortable doing with that. Goes without saying, obviously, I'm not a financial advisor, so please make sure you do your own research and just choose investments which are right for you. Now, this has a total expense ratio of 0.13%, so 4 basis points more than the other one. Is this a good or a bad thing? I don't know, because it all depends what happens in the future, and it depends how you would weight these two. Is it going to be less work? Probably yes, because it's much simpler to organize 2 investments than 5 ETFs. And then, can you make this even simpler? I would absolutely say you could. In this portfolio here, which I call Index and Chill, I've actually put in the cheapest I'm aware of global FTSE All World Fund here with Invesco's FTSE All World Fund. The ticker symbol here is FWRG. Again, it's another portfolio that I share. I'll make sure to leave the links below in the description. Now, while you're down there, if you would like to get yourself set up with a stocks and shares ISA on InvestEngine, or even a business investing account or a self-invested personal pension, don't forget to use the link in the description below. If you sign up there, deposit £100, you can get a bonus of up to £50. Now, terms and conditions apply. Make sure you check all the small print there as well. But I do leave the link in the description below. Anyway, going back to this single all-world fund, which has an expense ratio of 0.15%, this could outperform my 5 different ETFs, even though mine looks cheaper, because the way I've done things could mess things up a little bit. So this is a point I wanted to raise, and lots of people have been bringing this kind of question up over the last couple of months. Really all comes down to you. And I think one of the biggest deciding factors is how much of your time do you really want to spend on investments? Now, I'm going to guess that for most of you, you probably don't want to spend hardly any time on your investments. So something like this could be really, really simple. Set and forget, invest in this every month, for example, and then just index and chill. Or to the other extreme, another portfolio I spoke about in another one of my videos, I call this one cheapest with the S&P 500. And this is a mix of using different ETFs. Again, it's not perfect, but I wanted to focus on making a portfolio which would be almost the cheapest total expense ratio I could. So I did say it's not perfect, and sorry to get too technical and nerdy here, but you are blending MSCI with the FTSE, which are different indexes, and they have countries in different places. But I did want to play around with portfolios like this to show you that it is possible if you really wanted to hunt for those lowest fees. But fees are only going to be one factor when deciding you're investing. But at the end of the day, it all comes back to you. Now, just going back to my main portfolio, one thing worth saying here is that what I will have to do soon, maybe in my next portfolio update or early in 2025, is I will need to actually rebalance this portfolio. As you can see, the grey numbers here is where I actually started the portfolio, and these are the weights that I wanted to have my portfolio set to. As different parts of the world grow faster than others, those parts of the world have actually gone bigger than I actually set out to do. So what I will need to do is go back to the current makeup of the world based on market cap, and I'll have to work out where I want the different money in my account. Now, luckily in the InvestEngine, you can actually do that very simply. If I go to options here and I go to rebalance portfolio, what I can do is it will break things down for me and tell me exactly where my money will go if I want to get the weights back to where I set them. However, I can go back and change those and just double check exactly what I want to do. But that is available to you to do just in case you've never done that. Now, do let me know again in the comment section below if you want me to do a bit more of a video on that one and take you through that process. As we go into 2025, I think I'll be spending a big part of that first part of the year doing lots and lots of beginner content, because lots of my older stuff I think needs a big refresh, a big update. So expect lots and lots of new beginner investing friendly content as we head into 2025. Anyway, on that note about what happened in the future, I did a video recently going through what you thought about what's going to happen in 2025, going over everything from the S&P 500, the FTSE 100, UK interest rates, and even house prices. I think you'll be quite shocked and interested at the results. But anyway, I will see you in the next video. Happy investing.